In this video we will learn about IAS 16. Property, plant and equipment. IAS 16 has not been superseded or withdrawn. The core principles of IAS 16 remain unchanged. Minor amendments may arise from other standards, for example, IFRS 13 on fair value measurement. IAS 16, Property, Plant and Equipment is an international accounting standard that outlines the accounting treatment for most types of property, plant, and equipment. Objective of IAS 16 is to prescribe the accounting treatment for PPA to ensure, number 1. Consistent recognition, number 2. Proper measurement, and number 3. Appropriate depreciation or disclosure. Definition of PPA. PPA refers to tangible items that are held for use in production, rental, or administration. PPA are expected to be used for more than one accounting period. Examples are building, machinery, vehicles, furniture, etc. PPA recognition criteria. An item of PPA should be recognized as an asset if: number 1. It is probable that future economic benefits will flow to the entity. Number 2. The cost of the asset can be measured reliably. Not all assets comes under PPE, like assets held for sale, which we will cover in IAS 36, and biological assets, IAS 41. These cannot be the part of the PPE. Now let's take a look at its initial measurement. According to IAS 16, PPA is initially recorded at cost, which includes: number 1. Purchase price minus trade discounts. Number 2. Directly attributable costs, like installation, transportation, professional fees, etc. And number 3. Estimated costs of dismantling or removal, if there is an obligation. PPA subsequent measurement. IAS 16 allows two models for subsequent measurement. Number 1 is cost model. According to cost model, asset is carried at cost less accumulated depreciation and impairment losses. Second model is revaluation model. According to this model, asset is carried at fair value less subsequent depreciation or impairment. Depreciation according to IAS 16. 1. Depreciation is required for assets with a finite useful life. 2. Depreciation method, like straight line, reducing balance, units of production, should reflect the asset's consumption pattern. 3. Residual value in useful life must be reviewed periodically, and number 4 is no depreciation for land, unless it has a finite life, like a quarry. Derecognition according to IAS 16. An asset is derecognized when it is disposed of, sold, scrapped. No future economic benefits are expected. Gain or loss is recognized in profit and loss, calculated as proceeds minus carrying amount. Now let's look at its disclosure requirements. Key disclosures include: number 1. Measurement basis used, that is cost or revaluation. Number 2. Depreciation methods and useful lives. Number 3. Gross carrying amount and accumulated depreciation. Number 4. Details of revaluations, if applicable. And number 5 is restrictions on title or pledged assets. Summary of today's topic. 1. PPA is long-term tangible assets. 2. PPA is recognized only if future benefits are probable. 3. PPA is measured at cost or revaluation. 4. PPA is depreciated over useful life, except land. And number 5. Its disclosures ensure transparency. If you have any question, ask in the comments section.